Markets don't usually collapse when everyone expects them to. Sometimes the loudest consensus ends up being the weakest signal. Right now, a familiar narrative is echoing across crypto circles, but beneath that surface, a very different interpretation is forming. PlanB, one of the most followed Bitcoin analysts on the planet and the man behind the stock-to-flow model, posted that on X. He said, "Bears think $126,000 was the top, and 2026 will be a bear market mainly because of the 4-year cycle. That is a big misunderstanding. 3 cycles is not enough for a reliable pattern. The top could very well be in 2026, or 2027, or 2028. There has not been a fundamental Bitcoin phase transition yet in this cycle." Read that again. Now, what he's saying is not a prediction. It's not hopium. It's not a man trying to cope with a falling price. PlanB directly questions the validity of the popular framework used to interpret Bitcoin's current market moves. He contends that relying on simplistic cycle expectations masks what's truly happening. If PlanB is correct, those who call this a bear market might be missing more than just the price action. They're wrong about the bigger picture. To understand the debate, let's clarify the context and current situation. Bitcoin hit $126,000 in October 2025. That was its all-time high, the highest it had ever traded in its entire history. Then it crashed. Hard. It fell from $126,000 to around $63,000 by early February 2026. That's a 50% drop in roughly 4 months. 5 straight months of red candles. One of the deepest pullbacks in Bitcoin's recent history, comparable to the devastation that followed the FTX collapse in 2022. Today, as of mid-March 2026, Bitcoin is trading around $74,000. It's bouncing, it's grinding higher. But the damage from the crash is still fresh in people's minds, and the debate about what comes next is louder than it has been in years. On one side, you have the bears. They say the 4-year cycle is over. They say $126,000 was the top. They say we are now in a bear market that will drag Bitcoin down to levels nobody wants to think about. On the other side, you have PlanB, and he's saying something very specific and very different. He argues the bears base their conclusions on incomplete evidence, lacking the robust data required for conviction. Crucially, PlanB insists that a defining event signaling a true cycle top, a clear phase transition, has not yet been observed. First, let's talk about the 4-year cycle, because if you don't understand it, nothing else in this video will make sense. Bitcoin has a built-in mechanism called the halving. Every 4 years, roughly, the amount of new Bitcoin created and distributed to miners gets cut in half. Fewer new supplies are entering the market. If demand stays the same or grows, basic economics says the price should go up. That's the theory, and historically, it has played out. Bitcoin had a cycle peak in 2013, another in 2017, and another in 2021. Each one is higher than the last. Each one was followed by a brutal crash, and then a slow grinding recovery before the next halving kicked off the next cycle. The halving in April 2024 followed the same pattern. Bitcoin ran, hit $100,000 for the first time ever, then $126,000. Then it crashed. At first glance, the pattern of this cycle appears to fit the established narrative. That's what the bears are saying. The cycle peaked, now we crash. See you in 2028 for the next halving. But PlanB advises caution here. He's saying, you have 3 data points, 3 cycles, 3 peaks. And from 3 data points, you're building a law. You're calling it a pattern. You're telling people it's predictable. That's not science. That's a guess dressed up as analysis. In any other field, you did need far more data before making that kind of claim with confidence. 3 cycles are barely enough to suggest a trend. It's nowhere near enough to bet everything on it. But there's something even more important than the data problem. PlanB says the thing that should define the actual top of a cycle has not happened yet. He calls it a phase transition, meaning a clear shift in Bitcoin's market behavior or status, something so dramatic that it changes how Bitcoin is perceived and talked about, not just in price but in how it captures mainstream attention and adoption. So what does phase transition mean for Bitcoin? It's when Bitcoin moves into a new era marked by overwhelming mainstream attention, dramatic price movement, and a shift in market perception, similar to what happened at previous cycle tops. Think about what Bitcoin looked like at its real cycle peaks in the past. In 2017, Bitcoin went from $1,000 to nearly $20,000 in 12 months. That's a 20 times move. It was everywhere. Every taxi driver knew about it. Your neighbor's cousin was buying it. CNBC was covering it every single day. It felt unhinged. It felt euphoric. It felt like something that couldn't possibly last. And it didn't last. It crashed 84%. In 2021, Bitcoin went from $10,000 to $69,000. That's a 6 times move. Again, institutions were pouring in. Retail was going crazy. Celebrities were shilling NFTs. The mania was visible from space. Then it crashed. Now look at this cycle. Bitcoin went from about $25,000 before halving to $126,000 at the peak. That's roughly a 5 times move. It hit a new all-time high, yes. But did it feel like the 2017 or 2021 manias? Did your neighbor's cousin call you about Bitcoin this time? Was your dentist asking you which altcoins to buy? For most people, honestly, the answer is no. The $126,000 high came and went without the full-blown, society-wide hysteria that marked previous tops. The parabolic blow-off move, where prices rocket 10 times or 20 times in a short window, and every human being on Earth is suddenly talking about crypto. That didn't happen, and according to PlanB, that matters enormously. Without a blow-off top, there's no definitive cycle peak, just a sharp correction often mistaken for finality. Now let's look at what's actually happening on the charts right now, because the debate isn't just theoretical, it's playing out in real time. Crypto Rover, one of the most watched Bitcoin chart analysts on X, posted this recently. Bitcoin is on the verge of breaking resistance, but this is a tough zone. And if you look at the chart he shared, you can see exactly what he means. Bitcoin has bounced off the lows. It's grinding back up, but it's now sitting right beneath a major resistance line that has held multiple times before. Getting through this level is not easy. The price is hitting a ceiling. That's the technical reality. Yes, there's momentum. Yes, 7 consecutive daily green candles are a sign of strength, but momentum alone doesn't break through heavy resistance. You need volume. You need conviction. You need real buyers willing to pay more. Right now, Bitcoin is sitting in that uncertain zone, on the verge of something, but not there yet. That's why Crypto Rover says it's tough, and he's right. But here's where the bear case gets really dark. There are analysts right now who aren't just calling for a dip to $60,000. They're calling for something far worse. Chiefly, another well-known voice in the crypto space posted a chart that's been circulating aggressively this week. His analysis maps out Bitcoin's historical cycle peaks and bottoms: $21,000 down 81%, $69,000 down 78%, and now $126,000 down, he says, 75%, which would put Bitcoin somewhere around $29,000. His post read, "This chart has perfectly predicted the current bull trap to $74,000. Bitcoin is now preparing for a massive drop to $29,000 next week. Are you actually prepared for this scenario?" That's a terrifying number. $29,000 from $126,000. That would be one of the most destructive crashes in Bitcoin's history, and you need to take it seriously enough to understand it, even if you don't agree with it. Here's Chiefy's logic. He's looking at the pattern of diminishing returns. Each cycle, Bitcoin's percentage gain gets smaller, and each cycle, the percentage drawdown from the top gets slightly less severe, but still devastating. And he's saying the $74,000 bounce we're seeing right now is not a recovery. It's a bull trap. It's the market luring buyers in before the next final leg down. Now, should you believe him? That's not the right question. Consider, what would make him right or wrong? For Chiefy's scenario to play out, Bitcoin would have to break below $63,000, the February low. That's the key level. If that breaks, the $29,000 case becomes a lot harder to dismiss. If it holds, the bear thesis weakens significantly. That's what you watch, not the predictions, the levels. Then there's a third voice in this conversation that you need to hear. Against Wall Street, another prominent analyst posted something that should give any Bitcoin bull a chill. He wrote, "Bitcoin is still mirroring 2022 move for move. Kinda terrifying, right? We're about to find out if history repeats itself." He showed a side-by-side chart of Bitcoin's 2022 price action alongside 2026's. The similarity is uncomfortable. In 2022, Bitcoin came off its $69,000 all-time high, bounced a few times, gave people hope, then collapsed to $15,600. If 2026 follows the same path, the implications are serious. Now, this is where you have to think carefully. Chart patterns repeat sometimes, but they don't repeat perfectly, and they don't repeat forever. Every cycle has its own context, its own macro environment, its own catalysts. 2022 had FTX. It had aggressive Fed rate hikes. It had a full-on risk asset sell-off across everything. What does 2026 have? Tariff wars, a Fed that's been reluctant to cut rates, macro uncertainty, a Bitcoin price that's fallen 45% from its high, but still hasn't broken below its pre-halving levels. The patterns look similar, but conditions differ, and that matters. PlanB's framework stands apart. He moves beyond patterns and cycles, instead demanding a genuine market transformation as proof. He's not looking at price shapes. He's not drawing trend lines. He's asking a deeper question. Has Bitcoin had the kind of moment that fundamentally changes how the world sees it? He calls it a phase transition. In 2017, the phase transition was Bitcoin going from a niche tech experiment to a global speculative phenomenon. Everyone in the world learned the word Bitcoin that year. In 2021, the phase transition was institutional adoption, MicroStrategy, Tesla, Bitcoin ETF conversations. Governments are starting to pay attention. This cycle, the phase transition was supposed to be the Bitcoin ETFs, which finally launched in early 2024. And yes, that was huge. BlackRock and Fidelity now offer Bitcoin ETFs. Billions flowed in. The asset became accessible to every pension fund, every wealth manager, every retail investor with a brokerage account. But PlanB is suggesting that might not have been the transition, or at least not the full transition, because the price didn't behave as if a real transition were happening. There was no parabolic blow-off. The mania didn't consume the mainstream as much as 2017 did. So what would the next phase transition look like? A couple of things could trigger it. Think about what's happening globally right now. There is real geopolitical tension. There are wars. There is de-dollarization happening in certain parts of the world. Countries that used to park their reserves in U.S. Treasury bonds are rethinking that strategy. If any meaningful sovereign wealth fund or any mid-sized nation decides to hold a portion of its reserves in Bitcoin, that is a phase transition. That's a new type of buyer entering the market, not a retail trader, not a hedge fund, but a government treasury. And that changes the math entirely. Then there's the Federal Reserve. Interest rates are still elevated. The Fed has been cautious. It has not cut aggressively. But the moment the Fed starts a real sustained cutting cycle, liquidity returns to the market. And historically, when liquidity surges, Bitcoin has been one of the biggest beneficiaries. If war tensions ease and the Fed pivots, the combination of those two events could be the catalyst that triggers the phase transition. PlanB says hasn't happened yet. The liquidity surge, the institutional flood, the moment when Bitcoin's price does something so dramatic that even people who had never thought about crypto before are paying attention. That could be the blow-off top PlanB is waiting for. And if it hasn't happened yet, then this crash, as brutal as it's been, might just be the reset that precedes it. Now here is what you need to hold in your head at the same time. None of this means the bear case is impossible. It isn't. If Bitcoin breaks below $63,000, the February low, and keeps falling, PlanB's framework doesn't protect you from that loss. Charts and models don't stop prices from falling. Real money can and does disappear in bear markets, regardless of what any model says about the long-term picture. The macro risks are real. Tariff tensions are real. The Fed's reluctance to cut rates aggressively is real. And Bitcoin's correlation to equities, which has increased dramatically since institutional adoption, means it can and will get sold when risk-off sentiment hits Wall Street. When BlackRock's risk committee gets nervous, they don't call PlanB, they sell. That's the tension you're living inside right now. But here's the part where you zoom out and look at the full picture. Grayscale published a 2024 report highlighting a specific point. Bitcoin has not had a parabolic rally this cycle. The kind of move, that extreme, euphoric, near-vertical price explosion that historically preceded Bitcoin's multi-year crashes has not happened. That observation lines up almost perfectly with what PlanB is saying. Fidelity's Jurrien Timmer, one of the most respected macro thinkers in traditional finance, said Bitcoin could revisit the $65,000 to $70,000 range before the next leg up. That call came true. Bitcoin revisited that zone and has now bounced from it. Timmer isn't a Bitcoin maximalist. He's a macro investor who looks at Bitcoin through the lens of monetary history and long-term demand cycles, and he's still constructive on Bitcoin's long-term trajectory, even while acknowledging the short-term pain. When the people who don't need to be bullish on Bitcoin, the traditional finance analysts, the macroeconomists, are still watching it carefully and not calling it dead, that's worth paying attention to. So here's where we actually stand. Bitcoin is at $74,000. It's in a tough resistance zone. Crypto Rover is right about that. The bounce from $63,000 has been real, but it hasn't been confirmed yet by a clean break above resistance. Chiefy's $29,000 scenario is extreme, but it requires Bitcoin to first break the February low. If that level holds, his scenario doesn't play out. Watch $63,000. Against Wall Street's 2022 comparison is visually compelling, and you should be honest with yourself about it. The patterns do look similar, but 2022 had specific catalysts that collapsed the market in ways that may not repeat identically, and PlanB is making a different kind of argument altogether. He's not saying Bitcoin can't go lower, he's saying the conditions that have historically confirmed a true cycle top, the blow-off, the mania, the phase transition, have not been met. And without those conditions being met, calling this the end of the cycle, in his words, is a big misunderstanding. 3 data points are not a law, it's a suggestion, and suggestions can be wrong. Here's the honest truth you deserve before you close this video. Nobody in this space, not PlanB, not Chiefy, not Against Wall Street, not Crypto Rover, not the analysts at JP Morgan or Fidelity, nobody knows exactly what Bitcoin does next. The ones who sound most certain are usually the ones you should trust the least. What we do know is this. The people who called Bitcoin dead have been wrong every single time it has happened, and it has happened a lot. China banned it, Bitcoin survived, FTX collapsed, taking Bitcoin down from $60,000 to $16,000. Bitcoin came back to $126,000. The skeptics wrote the obituaries. Bitcoin ignored them. Long-term holders, people who have held for 365 days or more, reduced their selling by 87% between early February and early March. The panic selling slowed down dramatically. The hands that were going to fold were already folded. What's left are the ones who understand the bet they're making. PlanB is one of those people. He's not looking at the next week or the next month. He's looking at the pattern that unfolds over years. And he's saying, the real move, the one that defines this cycle, might not have happened yet. Maybe the bears are right. Maybe $126,000 was the top, and the 4-year cycle is as reliable as clockwork. Or maybe PlanB is right. Maybe we're in the dip before the move that changes everything. The dip before the transition forces people who ignored Bitcoin in 2026 to scramble to catch up in 2027 or 2028. Either way, what happens next at $74,000 to $76,000 is one of the most important tests Bitcoin has faced in this entire cycle. Watch this zone carefully. Watch $63,000 even more carefully, because one of these two outcomes is about to become a lot more obvious, and when it does, you'll want to have already understood why. As we wrap up, the big question is, are we in a bear market or just in the dip before the blow-off top? Please let's have your thoughts in the comments below. Don't forget to like and subscribe. Thanks for watching and see you in the next one.